Good morning. We will pay attention to analysis and interpretation today, and we will pay special attention to the return on average shareholders' equity. Return means how much profit is made by the equity, that is the capital that was provided by the shareholders. You are provided with information from the income statement and from the balance sheet, and they also give us information about the return on shareholders' equity for 2014, so we don't have to calculate the amount for 2014, we only have to calculate the amount for 2015. To calculate the return on shareholders' equity, we need the profit after tax. So for 2015, the profit after tax was provided as 904,000. And then we have to calculate the average shareholders' equity, and the shareholders' equity for 2014 was 2640, and for 2015 4123. That means that you have to take the total shareholders' equity, not only the capital that was provided by the shareholders, because the retained income is profit that actually belongs to the shareholders that was retained in the business to expand, and that's why they didn't pay it out to the shareholders. So this retained income actually belongs to the shareholders. The capital belongs to the shareholders. So my total shareholders' equity will consist of the capital plus the profit that was kept back in the business. If we calculate that, we get an average return of 26.7%, and they gave us the return for 2014 as 23.9%. The return on average shareholders' equity increased from 23.9% in 2014 to 26.7% in 2015. It indicates the profit that was made by the company that belongs to the shareholders on the capital that they provided to the company and on the retained income that belongs to the shareholders. The net asset value per share, here we will take the total shareholders' equity divided by the number of issued shares. So remember, we never work with the authorized shares when we do any calculation. We always use the issued shares. So the total number of shares that was already issued was 1.1 million. And if we divide that, the net asset value is R3.75 per share. That means that the amount that the assets minus liabilities is equal to a share is R3.75. In 2014, the capital was 1.6 million, the owner's equity. The number of shares issued in 2014 was 800,000, so that gave you R3.30 per share. The market price in 2014 was R3.40, and the market price in 2015 is R3.75. So although the market price increased from R3.40 to R3.50, what happened to the net asset value? In 2014, the value according to the financial records of the business was R3.30, and now it's R3.75. So it also increased from the previous year to the current year. But what is the problem now? In the previous year, the market value was higher than the net asset value. In the current year, the net asset value is higher than the market price. Although this market price increased from R3.40 to R3.50 in 2015, the market price is now lower than the net asset value. What does that mean? The investors don't have faith in this company, they're not impressed with the financial results of the company, That's why they're not prepared to pay the net asset value for the shares. They are only prepared at the stock exchange to pay R3.50, although the value of the shares is actually more. Although the market price of the shares is R3.50 and the shares were originally issued at R2 each, it means that the price of the shares are higher than the R2 that it was sold at, but it is lower than the net asset value. So between the time that the shares were sold at R2 and the current financial year, the value of the shares increased to R3.75, the net asset value. So it means assets minus liability is worth R3.75 per share. An additional 300,000 shares were issued during 2050. The equity divided by 1.1 million. In 2014, it was divided by 800,000 shares because we issued more shares in the current year. Although the equity is divided by more shares, it increased from R3.50 to R3.75 because the equity also increased. Although the assets increased, the mortgage loan also increased, but the asset increased with more than the mortgage loan. Although the number of shares and the liabilities increased, it is not the reason for the attitude of the public, because the net asset value is still higher than it was the previous year, because the total assets increased more than the liabilities. Therefore, the company will have to take steps to improve the image of the public so that they will be prepared to pay more for the shares. The company will have to do an investigation to determine why the public are not prepared to pay more for the shares.